Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. It's Wednesday, and the market is starting to head up, which is amazing. We had some good news, and it looks as if PayPal has moved up. Some of the other ones, Moderna. I did a little buying today. I bought a full position in On Semiconductor. Now, I did get stopped out of a position that I had in which that I had in Occidental. So kind of strange. It seems as if maybe we're going to get a little bit of a movement up here. But just let's kind of get into it. Basically, the question is PayPal moved higher, but the question is it a buy here? And I just don't know. I mean, let's take a look at the live chart. PYPL, of course, is the symbol for PayPal, and it did move very nicely. I mean, it is a major stock, but it's just one of those, it's just one of those things that we just don't know quite exactly, what's going down. It's been in this downward trend for a long time. Let's take a look at the weekly chart. You can see it's come all the way. It was all the way up and all the way down. I mean, if we're looking at it on a yearly basis, PayPal just hasn't been a good performer. I mean, this kind of gives you a look see on PayPal. Yeah, let's get that screen up. Boy, there we go. Okay, so this is basically how PayPal's been looking. And starting in August, it's starting to make its move up. I mean, it's been in this downward trend. I don't necessarily think it's yet time to buy it, but it's starting to make its move up. Let's compare that with the S&P 500, and that would be the Spider. That's the ETF that covers the S&P 500, and that kind of gives us kind of gives us a look. Now, I don't know if you can see this. It's kind of weak, but the S&P has been, it's off about 5% per year, but PayPal is 35% off for the year. Now, I will be honest with you, I am not a great um, uh, person to take it off the bottom. I like to see them move a little bit. So I'm probably not going to be in PayPal, at least not yet. But I just wanted to show you this movement up. It was just tremendous. It gapped up 6 points, and so and then it came down a little bit in the after hours, but gapped up 6 points, and then settle down. So I'd be a little bit careful about it here, but you definitely want to put this one on your watch list, as it will possibly be one to take a look at. Also, if you want to get ahead of the curve a little bit, I've put together a watch list that you might be interested in. If you're watching on TikTok, it's in the comments. You could just click on that. If you're not, then you can get it through the chat. So let me see if I can. Well, I don't know if I can put that up. I'll try to put that up after hours on the site so that you can see it, the watch list for everything here. But interesting. I probably wouldn't be a buyer of PayPal, but it's looking very, very good. Now, here's one I did buy today. It's On Semiconductor, and it is starting to lead. One of the good things about On is it is heavily into the automotive chips. Symbol for this one is ON, ON, and this one definitely is buyable. So, you might want to take a look at this one. I did buy a full position in this one today, and it seems to be doing well. A lot of good action on it as well. So you could take a look at kind of how it stacks up. The only other stock right now in the semiconductor space that's doing better than On is Analog Devices, but unfortunately, that's not at a level that is viable. It's not really a good place to buy it. On Semiconductor, on the other hand, is in a good situation to buy right now. So let's see if I can put that screen up for you. There we go. Yeah, and this is On Semiconductor currently. As you can see, it's coming up through this consolidation, and it looks as if we may get some action here. basically the bottom of the consolidation is about at 40, about at 45, and then it's all the way up here, basically to 71. So I started buying it in this position here. If it moves through the pivot, I may buy more. As you can see, there's my buy here. As it began, the beginning of the movement up. Now, this is the reversal line here. As you can see, we went really from a situation where we were underperforming, and then a few days we started to move above, and that's starting to look good. There was a lot of selling right before earnings, but one thing is earnings came in very, very good on. As you can see, the price action was good. Lots of nice sales moving up very, very nicely, up 25% this quarter. Profits were up 113%. Now, unlike a lot of the other companies that are in this space, this has a PE ratio of 15, which is super because it's not overpriced by the market. The cash flow is very strong, $4.15 per share each quarter. So return on the equity here is 32%. Now, obviously, you don't want to totally trade on fundamental analysis like this, but it is looking good. The one thing that you can see coming into that is that, a year ago, there were 1,443 funds in it. Then in October, 1,592, March, 1,667, and then most recently, 1,898. So definitely the money is moving into this issue, and it's something I think you can be pretty sure that, if we get a nice upturn, that this will be a leader. This will definitely be a leader. So this is the small portfolio. Now, I did have kind of one setback today, and that was Occidental Petroleum. I got stopped out on Oxy. I can show you where that was. And I got stopped out. I may try it again, but it wasn't working for me today. I was stopped out, and basically, that's the way it is. When a stock falls on the string trading, I'm not giving them a whole lot of time. If it goes down more than 5%, I'm out. And as you can see today, we did have quite a bit of a pullback, and it pulled below the 50-day moving average. And I was sort of keying on that 50-day, and I didn't want to let it go beyond it. So I didn't let it fall very much, and then I was out. It's down to $60 and 98 cents. I purchased for 67. I lost basically $7 here, but it's easier. It's better to lose a little bit rather than end up with a bad situation. I'll probably try again on this one. Still, it has a relative strength of 99. So that's really, really good. The earnings were strong. It's just, oil prices, because of the potential deal with Saudi Arabia, they may moderate a little bit. Still, very, very strong stock. Warren Buffett is heavily invested in the stock. I didn't invest in it for those reasons, but for technical reasons. And hopefully, I will be back in. I will be back. I will be back in. So really, mostly in cash still. I cut the position on PBR, which is Petrobras, to a half position, and also I have a full position in onsemi and a full position in ExxonMobil. So that's currently where I am with the small portfolio. Here's all the stocks that I own currently and kind of their performance today. Oxy, of course, it was off $2.75 or about 4%. I was really tight on the stop on this one. Exxon was down 2.16%. Cheniere, which is that is the LNG play, the LNG liquefaction, that was up today. I hold that in another portfolio. Again, I reduced my position in Petrobras, symbol PBR. I think that is Pabst Blue Ribbon. That just shows you where my head's at. Again, I picked up on semiconductor, moved up almost 4% today. So overall, pretty good day. A pretty good day out there. So let's get to the questions. Thanks for holding, and let's see where we've got to go. Okay, and hello, Jim. What do you think about T2QQ and Tesla? Well, interestingly enough, Tesla, let's take Tesla first, because it has made it has moved above a key level, that being the $900 level. Tesla basically is, that's one of the old buy points. The current buy point is 1,200 on Tesla. That's way, way, way up here. As you can see, This is the actual buy point for Tesla. It's pulled way back, but this level here at about 900, that is essentially the range. So what we need, so now it has moved above that key level. So I believe it may move all the way up to 1200. But right now, I think I'd be a little bit careful because I think it's going to pull back a little bit. It's got a little bit ahead of itself. When these slopes get a little bit too steep, they will pull back. So I'm kind of expecting it to pull back to that line. But Tesla is actually looking very good. I don't have a position in Tesla currently, but this is looking very, very good. If you go out to the monthly chart, you can see that that really. The whole thing is, it's moving in this very significant area from about 900 up to about 1200. And that is a good place for it to be currently. Of course, it's at 922. So would I buy it here? Well, I don't know. We're still in a downward trend in the market. The relative strength is 77. I typically like to see at least 80 on the relative strength. But it is starting to set up, believe it or not. Tesla is starting to set up again, and that definitely is something that you can look into. Now let's take a look at the TQQQ. Now this is an ETF that is basically is 3x the QQQ, of course, which is the Nasdaq 100 ETF, and this one is down a little bit after ours. It was up, but it was up on relatively weak volume. I'd be rather careful with this one. In this market, because we're still in an overall downtrend, even though the market is trending up right now, the market is still trending down. So we still haven't necessarily bottomed. I'd be a little bit careful buying this one. As you can see, this is the 30-minute chart here. At the end of today, there was a fair amount of selling. So I probably would not be a buyer of the TQQQ here, and I would probably wait a little bit on the on Tesla until we can see it set up some more, because right now I don't think it's set up properly, even though it's above that 900 level. So I would be very careful on both of those. Okay, let's. Oh, Lisa, hi Jim. What about ARK? Now ARK Invest. This is Kathy Woods' fund, of course. ARKK, and it holds a lot of Tesla in it. The action on Tesla today could be good for it, but I think overall, I don't like to buy anything that's below the 200-day moving average. And let's take a look at that, just so you can see it. What I'm talking about here is anytime you have a stock that is trading below that 200-day moving average, you've got to be extremely careful. This is the 200-day line here. And even though it's starting to possibly trend up, it's got a relative strength of 15. This is just not something, this is not my style of trading. There are people that are great at taking these off the bottom, but not me. I want to see more strength. I'm going to pass on this one. And the reason I'm going to pass on it is because I want to see it move above that 200-day moving average. Right now, according to the way it's looking at, money is still flowing out of the issue. As you can see, the slope of this line is downwards, and that says that money is flowing out of this one. Even though we're starting to see a little bit of a pickup here. There are some bargain hunters down here that are buying, but again, because it's an ETF, this is all retail investors. I don't really want to be in an area where it's like that. So, ETFs are only really bought by retail investors. There are some exceptions, but very few. I don't really want to be. This is a club I don't want to be a member of, to be honest with you, right now. If it can improve, maybe then I would go do. I would possibly buy it, but right now, I would just have to say on this one, I would just have to say no to this one altogether. It's just oops. There we go. Okay. Sometimes there we go. Okay. A little bit of issues there. All right. So yeah, I just think you've got to say to this one, no buy. I wouldn't be a buyer of ARK Invest. It's not set up correctly, and I just don't really think that it's worthwhile to buy. Now we're going live on TikTok. Thank you everybody for holding on there. I very much appreciate it. Let's take some more questions from YouTube. And if you're watching this on TikTok, very easy to jump on over to TikTok, to YouTube, just youtube.com/Dallas Trading Floor. So very easy to get on over to there. Okay, let's take a look at AMKR. It's done very well today from the last week. Okay, well, let's look at it. I'm not in a lot of these funds. AMRKR. Let's take a look at that one. Yeah, I agree. Amkor Technologies. Okay, definitely manufacturers. Okay, Grid Array. Okay, so this is definitely in the semiconductor space. Definitely. Look, there's another one that we ought to take a look at. It's called it's called PTech. I think no. I think it's PTech. And then we ought to look at this one. It did very, very well, as you can see. Let's compare this one here to let's see, PTech. I think that's right. PTech. Oh. TEK. Oops. I can't get it right. Yeah. Okay. No, I can't see it. So, but yeah, this one is definitely looking very, very good. And let's get back to it. Yeah, definitely looking very good. Let's look at the fundamentals on it really quick. Absolutely, look at that. They went through some nice earnings there. The earnings were up 7% in terms of sales were up 7%, flat on earnings. Just went through earnings. Cash flow is strong, very strong PE and 10p. And of course, one of the good things about this is they're based in 10p. And of course, there's a lot of foundries that are going in there. Intel's building there, and Taiwan Semi. So definitely a good market on it. It's above the 200-day moving average. That's also a very good sign. We have an 87 relative strength. That's very good in terms of that. Let's look at the checklist. It's a decent checklist, set 67, which is definitely very good. On the pattern recognition, we're still about 5% from the pivot cup with handle at 23.99. So we are getting ready. This is potentially still very viable. Let's go to the weekly chart to kind of see if there's an alternate entry here. Yeah, so this is the pivot. It was way back there. So that's the pivot right there. So you could really buy this from about 23 up to 26. It's going to pull back a little bit tomorrow because it's a little bit extended here. But this is looking like a very good. This is looking very good. Thanks for bringing that up. Amkor Technologies in Tempe, Arizona, looking very good. Good chart. And just have to say, I think this one is viable right now. Up to about 26 is where I'm seeing it. That's sort of the, oops, not no buy. Yeah, this one's viable up to about $26. This line here, and so looking very, very, very good on this one. I'm not in this one, but thank you very much for that. That's a good. That's definitely a good chart. Definitely to look at. Oxy pulled back because OPEC. Okay, that's why, to increase production. Yeah, I mean, I was sold out on Oxy. I just, what I do is I just have my my stop losses. It triggered today on Oxy, and you can see it came all the way down here below the 50-day moving average. So it came right down, and then let's see what is done in the after hours, if it said anything. Yeah, it came all the way down, big sell, and then it bounced back up to 61, and 61 was my stop. That's where I had my stop, so I was sold out there. We'll see how it performs. So I'd probably move right back up tomorrow. But again, one of the things about stop losses is, remember, you can always come back and buy a stock again. You're not necessarily stuck, but if you don't do the stop loss, then you can be out a lot of money. So that's why I do. That's why I do this one. I recommend it absolutely. Okay, let's see. Do we sell the oil stocks? You know what? That's a really good question. I did sell Oxy today, and I reduced my position in Petrobras. I still have Exxon, but that's it. I mean, that's the only other one that I have. So I basically have Petrobras, PBR. I have a half position in that one, and then I have ExxonMobil. So Petrobras pulled back a little bit today as well. Not quite as hard as Oxy did, but again, still this meets the rules. It's above that. It's above the 200-day moving average. It's got a relative strength of 98, which is very strong. And but it did pull back a little bit. I did reduce my position. I now have a half position, but I'm still in it because I do think we're going to see some more strength when these index lines catch up, especially the 21-day. When that catches up, then I think we will see that going. So I have a half position in this one currently for everyone out there. I'm not anti-oil. It's just been kind of a more difficult role with OPEC, I guess. All right, talking from Canada, Troy. Let's look at GLDD for Troy. Great Lakes. This is one I have heard of this one. I've never traded it. Provides dredging services to government agencies. Well, boy, you know what? I don't know. This is very dependent on government contracts. I mean, if they've gotten a good government contract, then I can see it. But I don't like the fundamentals on this one. It's off. It's off 12% in terms of its sales. It is losing a tad bit of money, not a lot. Very low PE of 14, but I still think, the one thing is, depending on fundamentals, is that if it's not in the right area, it can be tough. I think you want to avoid this one. The chart just doesn't look that good. So I think you want to continue searching for better merchandise right now. So I would say avoid GLDD. I would avoid this one right now, just because it doesn't. Just because it doesn't really stack up here, and I don't think it's this chart is really working. So Great Lakes Dredge and Dye-Dock, I wouldn't recommend buying it. Let's see, on the other one that you brought up, thank you so much, Troy, and that is TUSK. Let's take a look at that and see. Mammoth Energy Services in Oklahoma City. Okay, so it's a fracking. It's interesting. It's fracking. It's $3 stock. Yeah, the funny thing about this business is that there's a lot of, there's a lot of demand for fracking services out there. So just talking to a colleague of mine today, and he's sort of an investment banker, and he's raising money for fracking, for sand mines, for the to make the fracking fluids. So there's definitely a strong demand for these kind of services, which is good, and definitely has moved up 89%. Now this is a little bit speculative. I don't know. I don't think this is ready yet. It lost 43 cents a share, and so I think it's a little bit too early on this one. I would definitely watch this one because I do think it's good. Let's go out to the monthly, see how long they've been around. Yeah, at one time, of course, it was all the way up here at 40. Now it's at 4. So this has got about a 10-fold move. Here's the thing. I probably would not be interested in this until we saw a movement above about 8 right there, because that's sort of where you can see the ceiling right there at about that level. So that's where we want to see if move and hold above that. So I would probably not be a buyer on this one either, just because it doesn't look as if that would work. That it doesn't look like that would work probably as well. I mean, I don't think that one probably would work that well. So let's go to the next question from TikTok. Disney. Okay, that's a blast from the past. I actually shorted Disney a while back, and we did okay doing it that way. Disney, I don't know. It's an interesting company. For some reason, I'm having trouble with my banner system. There we go. So this is a question from TikTok, and it is regarding Disney. So let's take a look at that Disney chart and see what we've got here. It looks like it is still below that 200-day moving average. So definitely not something we want to see. This really isn't viable, unfortunately. As you can see there, I shorted these are my shorts that I show. I entered the short and then I closed the short, but it is starting to move a little bit above the 50-day moving average at about 100, but it's well below the very critical 200-day moving average. So, I don't even think you can consider this until it's moving above that 200-day moving average, and that's the 200-day moving average is 132.74. It's at 108, so it's got a lot of repair to do. So right now, right now, it's sort of broken, and I probably would not be in this. I probably wouldn't be in Disney. So I think Disney right now, DIS is broken. It would be a no buy for me, just because we're moving down and the chart's broken. You don't really want to, especially in this market, it's just not a good idea to buy stocks that have a broken chart. And this Disney definitely has a broken chart, so I wouldn't be a buyer of Disney here. I just wouldn't. It's really not the kind of thing I want to see it come above about 132 before I buy it. Currently, it's at 109, so kind of a long way to go there. All right. GIS. People need to eat. Good question. JS. Let's look at GIS right now. People definitely need to eat, that's for sure. But interestingly enough, the fertilizer stocks have started to move lower. This is really a safety play. General Mills. I mean, who hasn't had their cereal? I mean, I don't think there's anybody alive that hasn't had something that they make. So very good company. It's in the buy zone currently. There is a buy point on it at 73.99. Now here's the problem, of course. I don't know the problem with General Mills. Is this stock is, here's the thing. This stock is not going to double in value. I doubt it will ever double in value because it's a very mature market now. So I probably would not be, and again, it's not my style to buy off the bottom. There are people that are very, very good at doing it, at picking up bargains, but, this isn't one of them, I don't think. And so I probably would not be a buyer here, even though it's got some good stuff going on. Strong checklist. It is currently right above a cup entry, and the entry point, the pivot is 73.99. It's 75.50, so it's just above that. It's in the buy zone, but I wouldn't be a buyer. So even though even though this one is in the buy zone, I probably would not be a buyer of this one. So even though GIS is in the buy zone, I'm not a buyer. So I'm just not a buyer here with GIS. Good company, but I'm just not a buyer here. It doesn't excite me. there's enough risk to go around. I kind of want to just keep my cash for better setup. So I'm looking for a better setup, and that's sort of how I'm approaching it. Let's look at AGO, and AGO, symbol AGO, is Assured Guaranty. This is, of course, a Bermuda-based insurance company. Insurance is sort of one of the ultimate safety plays. Not really a huge fan of investing in insurance companies, just because they typically don't really, again, they don't really double or triple. They're slow but sure, and they're great. They're great stocks a lot of times, but I'm not a huge fan in terms of making money on their price action. That's one of the things I have against them. But this one's looking good, 90 relative strength. The insurance area is pretty good, property and casualty. This year, we've got to look at the potential of hurricanes. Hurricane season is coming, so P&C companies can. Actually, it's been a tough try this year on both. The life insurers are having trouble because of COVID. There's actually a lot more deaths, especially in the younger range, people that are basically 25 to about 45 than ever before. As a matter of fact, it's starting to show up very heavily. So we're going to see some losses on some of these life insurance companies. Life insurance is considered one of the safest investments, but I think there's a monkey wrench that's been thrown in because everybody has pretty much been universally vaccinated, except for yours truly. I was never vaccinated, never had a booster. We're going to see a lot of deaths in that younger cohort, and that is going to affect property and casualty. That's going to affect life insurers. So be careful about that. I'm not so sure that insurance is the place to be. Property insurance maybe, but reinsurance probably is good, but the other not so much. So I'd be a little bit careful on that. There's a lot of headwinds in the insurance industry, especially in the life insurers. Those are the ones that I think are really the most vulnerable right now. All right, Drunk Skidward wants to take a look at SoFi, and this is a fintech company, of course. SOFI, and this, I believe, this is the kind of the sort of the layaway company. Not really looking good. It did have a nice pop today, but the relative strength is 22. It's below the it's below that 200-day moving average. Not looking good. It's also below $10 a share, and I think it's getting disinvested by some of the funds. Let's take a look. No, I think we're still pretty strong. No, we're starting to get disinvested. You notice how the number of funds that own it have been going up, and then basically in March, that was the first year. They were going up through March, but then they've started to go down. So I think this, you got to be careful here. I think a lot of people are going to lose a lot of money on this stock. It was one time up here at 26. It's now currently $8. So it's basically lost about 3/4 of its potential. Let's chart this one against I want to chart this one against PayPal, because I think that makes sense. So SoFi, and let's look at SoFi, and let's look at another fintech company, PayPal, PYPL, and I want to compare these because they are similar. They're in a similar part of the market. So let's see if we can get PayPal to. Yeah, okay. So interestingly enough, it has outperformed PayPal, which isn't saying much because PayPal's performance has not been that great. Let's take a look at the comparison. And there we go. So basically, SoFi is here. And if you invested $1 back here a year ago, boom, you would have had a little bit more than 55 cents if you invested in SoFi. And PayPal, 35 cents. So really, really terrible performance. I don't think you really want to go there. You want to kind of go with the trend, and I don't think, unfortunately, SoFi is the way to go. I wish it was, but it's just not. AGO, I think, did we do AGO? I think we did. Look. Trigger guarantee, yeah, we did. Okay, so let's take a few questions from TikTok. And, what do you think about Galaxy? Oh, how about Citigroup? Okay, yeah, let's look at Citigroup. Not a particular favorite of mine, Citibank, but it is a big it is a big it is a big company. So let's take a look at Citi. Try to get my screen up here. All right, sorry about this. I'm having a little trouble with my. Darn it. Let's see if I can get this to. Let's just get rid of that. All right, so let's see if I can bring up this chart. Boy, I'm having trouble bringing it up. Yeah, I'm almost there. Sorry, I lost one of my screens, so that's why the difficulty. Bringing up Citigroup. Now I think we can share that out. There we go. And this is Citicorp. It's a little bit of a bounce, but it looks like it's still in a downward trend, as you can see here. Oh, come on. Still in a downward trend on this one. 33 relative strength. I did have a little bit of a increase in sales. Profits are down. I just don't think you want to be here. So I would be avoiding right now. I would be avoiding Citicorp right now. So, and I think that's true with many of the big bank financials. I think they're going to have some issues. So, for Citicorp, I would avoid it just because I do think they're going to have some problems with their losses. There's a lot of potential. There's a lot of potential losses, especially in the real estate market, which I'm afraid is going to bleed over into some of the money center banks. So I would avoid Citicorp here, just because it just doesn't look good for the chart. So just to kind of reiterate some of the ones that we were talking about today, in terms of in terms of viable ones. Of course, I think that onsemi is viable. I also think I think onsemi is viable. I also think that AGO. Let's look at that. Kind of fumbling around here today. No, I would say I probably wouldn't buy AGO. Yeah, definitely AMKR. That's definitely the case. I like that. AMKR. So that's pretty much it for today. Pretty much all of the symbols that I have for you today. Let's see. SoFi is a no-go. GIS, I think that wouldn't work either. AMKR, I really like that suggestion from TN Berg. Very nice. Very nice on that one. PBR, let's take a look at that one. I did sell that today, half position. PBR, that's Petrobras. And I think overall it's good, but with this today, it was off a little bit because of the deal with OPEC. It did come right up to the pivot, but it's still looking pretty good. I did reduce my position in it just because, I wanted to protect where I was at. But I still like this stock a lot. It's in this cup formation, and I do think that one possibly is a winner as well. Well, thank you everybody so much for taking a look at my little show here. I hope everyone's doing well out there. Again, I'm actually only about 30% invested right now. Very, very low investment. Right now, with question from about DraftKings. I don't think that a lot of the things that worked last year just aren't going to work right now. DraftKings currently is 18 relative strength. That means that 82% of the market is doing better than DraftKings. So I would not be a buyer of DraftKings here. Just not really, really good. So no on DraftKings. Apple did make a nice move. The problem with Apple, though, it's still trading below the 200-day moving average. So that's something that you got to be a little bit concerned about as well. I still think if you're not already in Apple, it definitely has made a good move. I don't think anyone's going to, I don't think it's going out of business anytime soon. But I definitely think it will pull back a little bit today. But I think if you bought it above 160, I think you'll be fine on Apple. But I would be careful, I would be careful about accumulating too good a position. I think that we have a move on Apple from about 160 on up to about 182. So that's kind of how I see it. All right. Well, everybody, please like the show. I really appreciate that. Helps me out tremendously by liking that show. And of course, if you're not already a member of Action Trailers, just go to www.Dallas Trading Floor. And if you're watching on TikTok, super easy. Just go to that Beacons, click on the link, first and last name and email address, and get all the information for free on that list. Also, we have a chat room as well, which it's definitely, you might want to check that out as well, and some nice other features. But you got to be you got to be on the list at www.Dallas Trading Floor. So please like the show. I'll be back tomorrow at 5 o'clock. Thanks everybody. Happy trading. Stay safe. Right now is not a time to be fully invested. I'm only about 30%. I'm 70% in cash, 30% invested. So be very, very careful out there. We are in an uptrend, but it's not a huge one by any stretch of the imagination. So you have to be super careful in this market. We're trying to increase exposure, but it is not time to be all in right now. So I'll see you tomorrow at 5 o'clock.